I think people are referring to a couple of points. One is, I think Parag Bhai in his book had mentioned that IPOs generally are overpriced. So that was one data point maybe people are referring to. Again, we have been asked at our AGM in the past whether we have applied for some of the IPOs, and we said typically we don't apply. So, although typically we don't apply in IPOs, it's not a cast in stone kind of rule. And I'll tell you why we don't apply in IPOs and why we took a position in CAMS. Firstly, in IPOs, either the offering price can be very, very high and valuation can not be attractive, in which case it does not make sense to apply in the IPO. Or if the IPO is attractively priced, the oversubscription is so much that you don't get any allotment. So in both the circumstances, there's not much benefit in applying for IPO. Just as a context, let us say if the oversubscription in an IPO is 100 times, if you have applied for 100 crores, you will end up getting only 1 crore. So 100 crores of your money gets blocked and only 1 crore worth of allotment is given to you. And that's the reason why we don't apply in IPOs. However, even in the past, we have applied for some select IPOs when we had ample liquidity. Just as a case in point, we have applied in the CDSL IPO in the past. The oversubscription was so much that we got a very, very minuscule allotment. And then we said no point in holding such a small quantity of shares, and we sold off CDSL. That was in the past. That was many years back when the IPO actually came. This is not the recent investment. Secondly, we had applied in IRCTC again because it was attractively priced, but again, we didn't get any meaningful allotment. In CAMS this time, we were approached by the investment bankers as to whether we would want to be anchor investors in CAMS. Now, the difference between applying in an IPO and being an anchor investor is, in an anchor investor position, you don't have to block your money. You apply and you get allotment for your shares. So the business of CAMS is very similar to the business of CDSL. CDSL does depository services for shares. CAMS is the record keeper for mutual fund units, which are in the book entry form. In depository services, there's a duopoly, CDSL and NSDL. In registrar services for mutual funds, there's CAMS and KFintech. Both are duopoly kind of businesses. Both grow in line with the kind of growth that the capital market sees. Both have operating leverage to an extent where the fixed costs remain the same and they can drive more and more volume over the existing infrastructure. So businesses are very similar. So given that we had an opportunity to become anchor investors, we said, sure, we'll buy 100 crores worth of CAMS, which would come to about 2% of our portfolio. However, when investment bankers came back, there was a lot of demand for anchor investors as well. So finally, we got only 6.5 crore worth of opportunity in CAMS. And that's how this small position in CAMS came to be. So money was not blocked and we got the allotment, but not a meaningful allotment. So we'll decide one way or the other. Either we could buy more to make it a proper position, or we could sell the existing shares. That's the background.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.